Hello, hello, everybody. Thank you and welcome. This is episode 3 of Trading Wisdoms on your favorite YouTube channel, Crypto Banter. Please go ahead and give that like and hit that subscribe button. I want to say thank you to you and to the Banter community for this opportunity. You may know me from Twitter. You may also know me from being an author from my book, Trading Wisdom. And this show is Trading Wisdoms. I'm going to break apart some important things for you to know, one lesson at a time. We'll do some chart analysis and we'll bring on a guest. We have a really excellent guest today as well. So I think you'll be excited about that. And just as a programming note, I do wear the mask for privacy and not political reasons. And with that, let's get this party started. So trading is really hard. I've been doing trading for a long time. And when I first started out, I didn't know where to start, where to go. And I was just making mistakes. And after a while, I started to learn from those mistakes. And I learned that I didn't want to repeat them. And a way to do that is to teach other people how to avoid those mistakes. And so I've been doing that now for many years. And mostly through my Twitter account, or really starting out on my Twitter account at Big Cheds. That's where a lot of you probably know me from. I am a chart nerd. I've studied Japanese candlesticks, classical charting. I am CMT level 1. And you may know me from my book, of course, Trading Wisdom, 50 Lessons Every Trader Should Know. It's available on Amazon. If you can't afford the book, if you can't download it wherever you are, I do have a free version on my YouTube channel, which is at Cheds Trading. And I have a playlist. I'm doing one lesson at a time every 3 or 4 weeks. So please do check that out. And if you like to learn about my technical analysis, if you're looking for some more long-form education, please check out Bitcoin Live, where I'm a founding analyst, the best-in-class educational platform for crypto. So we're going to start out right now with the book. I'll leave this section up here for you to pause and go back later. I'm trying to speed up this introduction. We get right to the show. I want to take advantage of the time. So you can pause this and go back in it later. And it's really what I said, how I've really built my career on being a newbie helper and a chart guy. And I think a lot about trading psychology. So once again, thank you. Hit that like, hit that subscribe button. We're going to do lesson 12 today. Define your risk. So, this is one of the most important things really that any trader needs to learn is defining your risk. Because if you don't properly do this, you won't survive long enough to make it as a trader. So we're going to, we'll get into that. So for those of you who are reading at home, we'll go right to page 33. So I'm going to read a section from this. We'll start here. I cannot tell you how many times as a trader I have refused to sell for a small loss and it blew up in my face. When I looked at my brokerage account and hit refresh, seeing that position in red made me feel uncomfortable. And because of that, I was unwilling to sell. Selling would have made that loss permanent. So I held on in the hopes that I could turn things around. What happened next? That small loss turned into a big loss. So you think about that. I've done it many times. I'm sure all of you have as well, where you have a small loss and you say, you know what? I don't want to take this loss now. I still have time. I can turn it around. And what happens is it will compound. It will get bigger, right? You need to understand, and the way to do this is to define your risk. You define your risk by saying, this is the point at which my trade will fail, right? I have an idea for a trade, and the idea for the trade is, for example, that it held a certain support level, and you bought, on a retest of that support level. Well, if that support level fails, get out. You bail. Right? Your whole idea has failed. That's your stop loss. It's your idea has failed. That's how you define your risk, right? In the book. So I was too stubborn to sell and take my medicine, and instead of selling, I stood there frozen in panic, Never get in that position. You have to always feel like you're in control. If you're frozen in panic, you've made a mistake, you should probably limit your exposure and then reassess things. From the book, quote, refusing to take a small loss will often lead to the opportunity to refuse to take a big loss, right? Think about that. Refusing to take a small loss will lead to the opportunity to refuse to take a big loss. If you started out on the wrong foot, you probably misread the chart. Your timing is off. You really need to stop. You really need to limit your exposure, right? So how do you do that? Well, we can talk about bankroll management, for example. You should never really put more than 3, 4, 5% of your entire bankroll into any one play. And the reason for that is you have to account for volatility. You have to account for, you know, losing the trade. It's going to happen. You're going to lose your trade. And some of the best traders actually win less than 50% of their trades. Less than half of their trades are successful. It's because they've cut their losers and they've added to their winners, right? They've defined their risk by cutting their losers. And that's incredibly important. I see the chat room is vibrant right now. I definitely want to say thank you and hello again to everybody. Please hit that like, hit that subscribe button. So how do you avoid getting stuck in that position? Start with a plan and stick to that plan, which of course includes using a stop loss based on your trading thesis or idea. Once your trade is sufficiently in profit, moving your stop loss up to a break-even point or better is a great way to remove the stress and anxiety that comes from holding a position. So that's another thing. You always want to be thinking about, how stressed am I? Is this position making me feel uncomfortable? Because if you feel uncomfortable, you probably have too much money. You probably put too much money into the trade. You probably chased it. You knew you weren't supposed to, but you did. You chased it, right? So you want to also be thinking about that, right? Think about how you're feeling. And as I said, once you can move your stop loss into profit, you know, or at least break even. That way you can relax a little bit about it. So that's managing your risk, right? That's how you manage your risk. You know, it's the kind of thing that's going to determine whether or not, like I said in the beginning, it's the kind of thing that's going to determine whether or not you can stick around long enough to make it, right? You need muscle memory. You need trading muscle memory. You need to look at charts and try trades and have hundreds or thousands of those trades executed in your mind, that you know how to do it, that it becomes more natural, and that you can trade with confidence. You need time, you need experience, you need to refine your method. And, you know, there is no one method to trade. Many of you are new traders and you're trying to figure out, you know, what's my method? What should I do? Well, you know, I can only teach you my method. I can only teach you what I do. It's a blend of classical charting and Japanese candlestick trading. I often do a lot of sentiment analysis, paying attention to what the sentiment is when people are too excited. Usually I think about taking some profit, you know, that kind of thing. So you have to find your style of trading, and the only way to get there, the only way to be successful is to survive. You know, is to survive long enough to make those mistakes and learn. So you really need to define your risk, right? From the book, one of the keys to surviving this game we call trading is to define your risk at every available opportunity. Think about that. If you are ever given the ability to define your risk, every time you're defining your risk, I think you're making money, because you're preventing losing money. You're limiting your downside. You're opening yourself up to receive profit to the upside. This means limiting, and what do I mean by that? This means limiting your position size at every available opportunity. This means taking profit at major resistance or even waiting for a better entry. How actively and carefully you define your risk will have major implications on the long-term health of your bankroll. So you really want to think about that. You know, it's not enough to just enter the trade and have a good idea. You know, what do you do when the idea fails? What do you do when the trade goes south? Get rid of it. Cut it. It feels great. I'll tell you, I love taking a small loss. It's a great feeling, because you're protecting yourself from the future. You need to remain in the game. You need to continue trading to get experience. So let's jump right into Bitcoin. I know you folks are interested in that. There's a lot going on right now. So I'll pull up my screen. So what is going on? What is going on? So for many of you, you may not even know what you're looking at. We're looking at a daily chart. And you know what? Let's go to the weekly chart and we'll work our way outside in. We'll clean it up a little bit. So on the weekly chart, the uptrend has never really slowed down. We really just have a tightening consolidation range where we put in our recent high, we put in a low, a lower high, and somewhere in here, you know, we're likely to find that higher low and continue that equilibrium, that tightening range. You think about, there's one thing you want to understand: trends tend to continue. So this consolidation range after this strong move up means it's more than likely to continue in the direction of the prior trend, which is up. But there are important things to watch. You know, as a technical analyst, your job is to identify the trend and then to identify levels in the chart which would suggest that trend is strengthening or would suggest that trend is weakening. on this larger time frame, this weekly chart, we can observe this orange line. We've talked about it before on the prior shows. The orange line is a simple moving average. It's a 50 simple moving average. Simple moving average just means that every period in that 50 has an equal weighting. You may be familiar with an exponential moving average. I use the 8, which is an 8 EMA. Exponential means that there's more price sensitivity to the most recent candle. That makes it more sensitive, and I believe best used with lower time frames. Some people tend to use a 50 or a 200 EMA. I don't think that makes sense. I like to use simple moving averages for longer term, a 50 or a 200. The blue line, what's the blue line on the weekly chart? The blue line over the years has been that unbelievable buy the dip moment. On this exchange, Coinbase, it doesn't go back far enough. But back in 2015, 16, we had a double touch as we had here with the 200. We had it tested twice. So this is the must hold level, 200 on the weekly moving average. But short term in terms of a trend continuation level. What you want to understand, any kind of uptrend is going to do what is called a stair step. It's going to consolidate along the way. It can go up, let's say it comes up and it does a bull flag. Well, it breaks out of the bull flag and then it comes up and has a short-term reversal. When it comes back, you want it to find support at the top of the prior pattern, right? You want it to stair step. You want it to come up, create resistance, come back. That's where bounces come up. That's where it bounces, right? Hopefully you get the point. So we're going to build a base, and your job is to buy a dip in an uptrend. So what is that level? On the weekly chart, we can see, the 50, right? The 50 on the weekly has been a really critical level. So are we going to get there? Probably. We're pretty close to that. The 50 we need to remain closing above the 50 on the weekly. If we close below the 50 period moving average, I think we're seeing more downside and probably testing the lower part of the support range, 30K, maybe even lower. But we're not quite there yet because, as you will notice, we did that right here. We closed right at it, and the bulls rallied, and we had an excellent bounce. We had 6 weeks in a row, 1, 2, 3, 4, 5, 6 of higher highs and higher lows. That shows bulls advancing. That shows bulls building that rising demand and maintaining gains. All right, but we did have some warning signs on the weekly chart. We had this spinning top on August 23rd. It's a small real candle body. It does not have to have equal upper and lower shadows. It just shows some indecision after these nice 1, 2, 3, 4, 5 green candles in a row, a little bit of an indecision candle, but bulls rallied and put in a new high. And then we had the outside bar September 6th. What does that mean? So here's what it means. If you're rising, and let's say this is a top candle, if the next candle, the whole range of it eclipses that range, as we have here. This candle completely eclipses the range of the prior candle. What does that mean? And what does it mean in this context? Because candlestick signals are important to look at them in their context. Really, all signals are important to look at in their context. On this weekly chart, that outside bar represented a little bit of a slowing trend, a little bit of indecision. And we closed near the lower part of that candle, which suggests a little more bearish continuation to come. So this was a warning candle. It didn't really give you as well a warning sign as we saw on the daily, and we'll talk about that because it closed all the way down to 46. But it gave you some caution. It gave you it let you know we need to really pay attention to that key horizontal. What is the key horizontal? That would be that 42 to 43K level. You can see it pretty well illustrated here on the weekly chart where the price was rejected January, where the price found support in February, where the price was rejected in June, where the price was rejected in July. So you have to understand that levels, when they're broken, okay, when you have a support level, when you have a level rejected, you come up above it. If you hold it, right, it holds. If you lose that again, that's significant. You want to pay attention to that. We have a very clear horizontal level with time interval in between each attempt, which means a distance of time in between each attempt. It's a significant level. We're now trading below it. You can see that on the weekly chart. And in terms of putting one more thing in the weekly chart, and I'll jump back to the daily chart, we have about 5 more minutes of this type of analysis before I bring on our excellent guest. We had a head and shoulders play out on this chart. So we had, I'll go to the daily chart actually, and I'll illustrate that on the daily chart. So we had 3 thrusts. We had the left shoulder. I'll draw it really quickly. Left shoulder, the head. and the right shoulder. And what you need to understand is this type of pattern is really not actionable until it breaks what's called the neck base line. Now there's you can draw this neck base line a couple different ways. You can do a rising one, but really for me, the bottom support level here is right around 52, 53K. We broke that, okay? When you break a head and shoulders, what you do is you take the height of the neck to the baseline, you extend that out, down, and that gives you a general measured move, right? It's called a measured move. That dropped us into this rectangle. And it dropped us into this rectangle from 30 to 42 or 43K. It dropped us into that rectangle below the most important level in the chart, 42, 43K, right? So we consolidated below that level, right? We bounced from 30K up, back and forth. We had a bear pennant turn into a bear rectangle, kind of a descending triangle forming, and we broke out of that. And we saw signs. How did we know that bulls were picking things up again? We saw that bulls had closed above the 50 moving average, the orange line on July 25th. Why that's important is bulls closed below on April 19th. That was the first close below. Here's the first close below. We had a nice bounce. And where did the bounce run into? The bounce ran into the neckline of the head and shoulders. This is a very textbook type of move. It's called a pullback or a bearish retest, where you have a support level. It fails. You do a little consolidation. You bounce, and it was rejected. So that was not unexpected. So we were expecting a rejection. You may not have seen analysis like that everywhere, but as a chart technician, someone who observes charts, you were on watch for that. We also saw on lower time frames, right at the top, we had what was called a bearish divergence with the on-balance volume, which is essentially tallying up the red and green volume. We had two new highs put in, unconfirmed with two lower highs. That was a sign, a warning sign that bulls were not confirming that new high. So we had some warning signs, some divergence at a key level, and it broke down. But that's okay. We expect consolidation. But what we want to do is we want to see bulls hold on to hard fought gains, 42, 43K. What are we doing now? We're right back in the rectangle, right? That's not good. We do not want to be trading in this rectangle, this 80-day rectangle, because if we're in the rectangle, we can test the bottom of the rectangle, okay? So that's what you need to understand. We still have time to close, 2.5 hours, 3 hours. If we can close back up above 42K, I think that's a clear level to watch going forward for a pivot, for a momentum pivot. It's going to be above or below 42K at this point. So, there's clear bear pressure right now. You don't want to rush in right now. You don't want to rush in. Every kind of low time frame you're looking at right now, you're going to stub your toe, okay? I bet everyone was trying to do an inverted head and shoulders here. Oh, here's the shoulder. Here's the head. Look, and then you're jumping in. No, even if that was the case, you really would have wanted to wait for this clear momentum level for where the price had been rejected initially. If we get above 44.2, I think we'll see some momentum. But look at that. This is an hourly chart. We're closing near. We're below 42K. So at this point, I would be very careful. I would think on this daily time frame, I think I would start to look at this area right here, potentially on the daily chart, 36.7 on the weekly chart, which is probably the level we need to watch right now. It's going to be the rising 50 moving average, the orange line. We're at about 38.6, 38.9. So that's the level we want to watch right now. So, folks, I guess I talked a little long. We may not have time for chat room requests. So I do apologize for that because I'm really excited for our guest. I'm gonna bring him on. But I want to say thank you. I want you to please hit subscribe. Please hit like to the Crypto Banter family. They're doing a great job bringing you all this programming. Let's jump right into to our guest. How we doing, man?
Hey, bro.
Will, can you hear me, brother? Oh, it's my honor. Yeah, I can definitely hear you. We're so happy to have you here. Will, where can we find out more about you if people are interested? I know the Banter family knows who you are, but some people may not. How can we find out about you?
Sure. So I'm on Twitter at Clemente, III, and then also I do a weekly newsletter. It's blockwareintelligence.com. So I actually got hired on by Blockware Solutions about 3 or 4 weeks ago, and so now a lot of my work goes through them.
Well, congratulations. That sounds like something pretty impressive.
Thanks, man.
So where do you see that, that new partnership you have in that newsletter? What do you see that developing into? What are you hoping to do with it? And maybe tell us a little bit about that.
Sure. So it's just basically a market overview letter. It's primarily focused on on-chain analysis because I think that's kind of what I'm more known for. And I'm trying to kind of spread the education of on-chain, and then also kind of use my platform because the growth of my Twitter over the last couple months has been kind of mind-boggling. So I want to kind of use my platform to help educate people in other sectors as well. So, I mean, if you want to come on the podcast at some point, you're welcome to. But I had my buddy John Wick. He came on and did some technical analysis and options stuff. This week we did like a mastermind with some other on-chain analysts from Glassnode, and just trying to mix it up and get some different perspectives on the market because I'm learning too. I mean, this is honestly like, my first year in the market. Like I'm just basically publicly learning everything, and it's been interesting in that sense. But yeah, like I'm trying to just use my platform to help other people get attention, and then also just help my learners learn alongside me.
I think that's amazing. And I think it's a wonderful space. It's such a broad ecosystem where people can do different things. And, for people like me who don't know really much about on-chain, maybe kind of give us a brief, primer. And how did you get involved in it initially? How did you find out about it?
Sure. So I first started off like with Bitcoin, just to think as many people did, just the idea that scarce amount of Bitcoin, they're printing insane amounts of money last year. And that was basically my whole thesis. And then after diving down the rabbit hole and listening to numerous different podcasts, eventually I listened to one with Willy Woo. I'm sure everybody's familiar with Willy. And the way he just talked about the market was unlike, anything that I had heard before when I just, in terms of like analyzing the market. It almost, the way I think of on-chain is almost like we have X-ray vision over kind of what the different the entities that you can identify on the blockchain, what they're doing. And so from after I listened to that initial podcast with him, I just, went down the rabbit hole with, YouTube, all these different podcasts. I mean, it's a very niche thing still. So there's very limited content to dig into, but, I went through like everything I could get my hands on, and I guess I've become somewhat of an expert in the space because I just spend like a lot of time on it. And yeah, I mean, it's been exciting. A lot of the response from Twitter, and I think like, on-chain it's been interesting because I think this is the first real bull run, I guess you could say, that on-chain has been kind of in the spotlight. And there's a lot of new metrics that, we have even in the last couple months that we didn't have at the beginning of the bull run. I mean, and then if you look back at like 2019, 2018, Willy was using like NVT, which is just like a very simple ratio of transactional volume and market cap. And that was, his whole valuation framework of the market. And now we have, all these heuristics and data science behind like, actually tracking the different, categories or cohorts of different entities on the blockchain. So I think it's come a long way. And, once you start getting like these MIT graduates up in here and like you don't have me who like barely got through my last math class, then I think you're going to see some really crazy stuff. And yeah, I think it's kind of like at the tip of the iceberg still.
It's crazy how many people have kind of not conformed to what people are supposed to do, and they end up doing great things or kind of doing their own thing. So I think it's a good story. It's a great story. And it's nice that
Thanks,
people
man.
are, definitely, man. And it's nice that people are riding along with you and kind of seeing what you're doing, seeing how you're growing. So like Willy Woo, who are the people we should know? If I wanted to get, who should I know in on-chain? Who are the people that you really focus on?
Yeah, sure. So Willy, also this guy Checkmate, he's the lead insight analyst at Glassnode. Also David Puel, he's the one of the researchers that worked with Willy at the fund that they were running with Murad. He's a really, really bright guy. He just got hired on by a big firm, which I know he starts in like a week. So I don't want to say the name because I don't know if I'm supposed to or not, but I'm excited for him. He just got hired on by somebody. And then also this guy TXMC, he does really good work. He's, anon, but he came on the scene a couple months ago, and he puts out some really interesting stuff. Also, Dilution Proof on Twitter, he does some cool stuff. Obviously, like the Glassnode CTO, Raphael Schultzcraft, he puts out, he doesn't post a lot. Like, I post like almost every day, but whenever he posts something, you got to pay attention. Who else? Also, Dylan LeClaire. I don't know if you've seen. He's another younger guy. He does some on-chain stuff. So yeah, I think that's probably a good start there.
That's a great. It sounds like it's a really growing field. I think it's pretty cool, and I think the people who are watching, maybe they can reach out to you if they want to learn more about that and those people you mentioned. I kind of wonder, would you think of it more as like on-chain for not necessarily being for trading, but for more investing or holding and more of a swing type of a thing rather than, like a signals type of thing? What do you think about that characterization?
Yeah, like I think, you probably see a fair amount of my posts and, some of like the replies I get and stuff. And I think like there's this big misunderstanding where people think on-chain is best used for, and I mean, I know like me, like posting memes and stuff whenever we break out probably doesn't help too much, like the frog memes and stuff. But yeah, like on-chain is in my opinion basically like the economics of the network, and so I'm trying to build this broader picture of what's going to happen over the next couple of months per se. And so for me, the only major, like here's an example, like the only major decisions I've made are I bought in beginning of last year prior to 10K. And then I didn't call the top, admittedly, because honestly, like I didn't understand half, not saying that I know a lot about markets now, but I didn't understand half what I did back then in April. First run up, I was super euphoric and all that. And then I did nail the bottom right at like 30, 35K. And that was partially because I created a new metric right around that time. And so what you saw was like really strong accumulation from strong hands, and it was kind of diverging from price. And then now I'm looking for, trying to time the top of what I expect is going to be moving into, possibly Q4, but I think probably more Q1 of next year. But yeah, like I think to answer your question, on-chain is best used to identify like the broader trend, and then you can use TA to look for these more shorter term entries and kind of what's going to happen in the kind of short to intermediate term, and then also like derivatives data is important as well, and especially in the Bitcoin market because of the liquidity of futures. But yeah, that's kind of how I would frame it. Is like this is the outer structure, and then you kind of can build TA on top of that. And I think like also a lot of people on Twitter, I think they think I ignore TA, which is completely not the case. I think you need to use, in my opinion, like as many tools that you think are useful as possible. I just so happen to specialize in this one thing, so I post a lot about it. But I do pay attention to, I pay attention to you. I pay attention to Pintoshi, Cred, Donald, like all these guys, price structure wise. I do think that stuff's really important. Also, especially like when you get confluence, if there's a certain level that perhaps you saw, a really strong cost basis of, large entities, and at the same time, this is some key technical level. Well, in my mind, well, that level is even stronger. So I think like, you need to use these things together essentially.
I think that's wonderful. I think they go well together. Definitely thank you for mentioning me with those other people. I think they're great technicians. And I think you do some great work, and I think it's been an honor to have you here. I'd love to do a collab in the future, of course. Maybe just remind everybody where they can find you.
Sure. Thanks for having me on, man. This is a blast. Yeah, maybe next time we can get like a little more, in the weeds. But yeah, you can find me on Twitter at WClemente III. And then also, like I said, the newsletter is blockwareintelligence.com. That's also in my bio. But yeah, I'm hanging out on Twitter all day. I'm taking this semester off of school because the whole Twitter thing, to be quite honest, has just kind of like gotten out of hand over the last 2 months. So I'm just kind of taking some time to keep up with it all. But yeah, if you have any questions or anything, DMs are open and all that. So just reach out.
Awesome, guys. Give him love. Find him on Twitter. Check out his newsletter, and Take care, brother. We'll see you soon. All right.
Thanks, brother. I'll see you on Twitter.
You got it, man. See ya. So I want to wrap things up. It has been an honor. Please hit like. Please hit subscribe. This is Trading Wisdoms. The Banter family is my family. I want to remind you that you can find me. I'm on Twitter at Big Cheds. This show is based on my book, Trading Wisdom. It is available on YouTube right now. Sorry, it's available on Amazon right now, Kindle paperback. We have a hardcover as well. Check me out on YouTube at Cheds Trading. I have a free version of this book. I'm doing a video every few weeks. Check that out if you're interested. If you like my technical analysis, please consider joining Bitcoin Live, where I'm a founding analyst, the best-in-class educational platform for crypto. So definitely consider checking that out. But till next time, we'll see you next week. It's been an honor. Banter fam, Big Cheds out.